Hey guys, pleasure being here today again. And today we have Chris Tate. Chris is an incredible trader with over 30 years of trading experience, and I'm so glad and fortunate to have you here today on our show, the TradePod. So before we're diving deep into your trading story and journey that you have passed through, because 30 years is a long period of time. I would like to get to know you. So, Chris, before we start, tell the listeners who you are.
That's a powerful question to start with, isn't it?
Hmm.
I I am as you said, trader, and unfortunately, I have to age myself in that I've been trading now for about 4 decades. I
For
started
decades.
trading way, 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 way back when we had things like trading floors, where the internet didn't exist. We had none of this wonderful technology that you young traders have. So my career as a trader began as a private trader. I was in the process of contemplating completing a PhD in immunology, and I got sick of I got sick of being poor, and I had other interests, and that other interest was the market. And I made a critical error. I began trading during our 1980s bull market here in Australia, which was one of the best in the world. And I actually thought I was a genius because everything I bought went up, but I didn't know enough to understand that that is the nature of bull markets. When the bull market ended, the good times ended, and I thought, well, I really need to learn something about trading. Who knows about trading? Stockbrokers do. I found, much to my surprise, that they knew very little. In fact, they actually knew less than I did. But being a broker was very handy because I got access to all sorts of information, got access to early sort of what we would now term algorithmic trading systems, but also got access to a trading floor. Because in Australia, we had trading floors up until around about 1990. And being on a trading floor is an interesting experience. And it's interesting because you get to understand the ebbs and flows of markets. You get to understand the emotional swings that markets have. I stayed with broking for a few years and then just left and went out on my own. I couldn't handle it anymore. It was not me. I'm more of a private trader slash stuck away in a corner managing money for other people sort of person. That's what I prefer to do. And I was fortunate enough to be able to retire a very long time ago. And I've actually retired several times, but I've actually found it's extremely boring. So founded a company 25, oh, now, yeah, 25 years ago now with my business partner, Louise Bedford, where we actually mentor traders. And we've been fortunate enough to have traders from all around the world through all walks of life, from private traders through to hedge fund managers, through to commodity fund traders. And so that's my basic story. It's a little bit different to most. It's certainly different to the way people begin now. I'm somewhat, to a degree, envious of young traders like yourself who have access to all this information that we didn't have. But that is also, from my perspective, a problem because there is so much information. It's like trying to drink from a fire hose. So
Mhm.
that's my background in a nutshell.
Wow, that is a really, you know, speaking of a nutshell, you have mentioned that you were about to complete your PhD in immunology, and after you discovered that you lack of living in a really poor life, and you hated
Mm.
this this that situation. So I'm trying to figure it out because after that you spoke about your entire career that you have been retired way you know after a great amount of time from the day that we're living on. So I'm asking myself if it is a great why to start a trading career with, because you know having to being in a state that you are about to finishing to finish your PhD onto a trading career that you understood that you want to start with because you had the initiate excitement because you knew how to win the market in certain times, not necessarily be a great why to start with. So I'm asking you, what holds you or what convinced you that this is the right path for you to choose?
Good question. The flippant
Thanks.
answer, and it would be very superficial, is the money. But markets in and of themselves are a wonderful problem to work on. And they're a
Yes, it
wonderful
is.
problem to work on because you're involved in the problem intimately. You are actually part of the problem. And it took me oh, years to work out that I was a central component of the problem. And this is something I've seen with every trader I've met, every trader I've mentored. And it doesn't matter the level of skill, from people who manage their own small retirement fund to people who manage anywhere between 500 and 750 million US. They're the central part of the problem. I'll make a broad statement. I'm prone to making very broad statements. Most trading systems, particularly trend following trading systems, work. Add in money management, they work very well. They're always profitable, always. People have been talking about the death of trend following for 100 years. There are papers going back into the early part of last century saying, we can't watch the tape anymore, things have changed. I've never found that to be true. What I found to be true, though, is that everybody is central to their own issues and their own problems with trading. You can even go back to the works of Jesse Livermore, who was a phenomenal speculator in the early part of the 20th century. His book, Reminiscences of a Stock Operator, is a wonderful book simply because the central character is him, and the central character in all his mistakes is him. He is the one who gets it wrong. And this is the thing I found, and I found this with my own trading. And I found this with my own trading last year. I had a year last year where life just got in the way. It just did. And that unfortunately knocked me off kilter. And instead of being sensible, as you think I would be after all these years, and just stepping back, you have a tendency to think that you can solve the problem by going harder.
Hmm.
That's not what happens. You actually make the problem worse. And so markets to me and my involvement in markets were a fascinating problem. But that caused me a few problems when I started. I come from a fairly quantitative background, so I thought markets could be solved much like an equation. You just write it down on the blackboard. You start in the top left-hand corner and you end up with an answer down in the bottom right. And that's how I'd spent my academic career. That's not how markets work. Markets are much more complicated than that when you're involved with them. The moment you get involved in a position in a trade, all sorts of things happen. And you can take the best trading system in the world, but the poorest psychology in the world, and it will probably blow up.
Hmm. Wow. All right. So markets are a fascinating problem to solve. And if your academic background is, a quantitative background, which um, I think it's a phenomenal entry point to start with. Um, I right now I really understand you why because everything that I'm doing right now within my company and within all the operations that we're running right now in our space is about solving the massive issue that calls the market. In particular, addressing how human really interact with the market, especially elite traders like you, like the traders the traders that you guide over the years. So what I'm trying to ask you here, Chris, is that you have a great entry point. You have found your why. Now I would like to make it a much deeper conversation, speaking about fascinating problems. Give me, please, one fascinating problem that you try to solve, and you found it really fascinating, so you cannot forget it. And by the way, this problem or the solution, the direct solution to the problem, leads you until nowadays, and nowadays trading. So I think that would be a great ground base to start with, and yeah, let's direct us in our conversation to those stages.
I when I began my trading career, I was still involved in combat sports at a very high level. I'm by nature,
Mhm.
in things I'm involved in, extremely aggressive. That's just the nature of being involved in combat sports. It's just the way the world works. You can't be a passive participant when someone's trying to kick your head clean off your shoulders. It doesn't work. I unfortunately brought that mindset with me to trading, in particular trading derivatives and particularly trading exchange traded options. And because I had access to a trading floor and an operator, there were times when that aggression would overwhelm me. And the position size, you'd go on a tilt. The position size would be out of all proportion to what it should be, simply because of that innate aggression. But it was that very much young male thing of thinking that you could somehow tame the market, that you could somehow control it by sheer force of your will and your involvement. And I had to learn very painfully and in a very costly way that you're just a passenger on with the market. It will go in the direction it wants to go. You're just going in its direction if you're lucky. If you're trying to fight that direction, and testosterone doesn't work in trading at all, it is probably to some degree why, when you look at the returns of fund managers, and particularly hedge fund managers, that female hedge fund managers do better on a risk adjusted basis. They lack that testosterone based aggression because that actually makes you foolhardy. It makes you reckless, particularly when you're young. You just have this thing of wanting to go. And if your personality by nature is at times naturally aggressive, then markets amplify that. And when you get a string of losses, your response is simply not to pull back and to reflect, reassess, reorganize. It is to counterattack. It is to push harder, to push back, because that was a function of my personality. It's the way I saw the world in many respects. And it was something I really had to learn to dial back and to learn to control so that the aggression only comes out at times when there is an opening. You can't blitzkrieg markets. You can't overwhelm them. You have to be more subtle in your aggression. You have to be more of a sniper so that when the planets align, then it is time to go. You don't just go and play double or nothing because the thing that people and I forgot when I was young is that the end point of that statement, it is double or nothing. And nothing is nothing. You have to start again then. And when you start again, when you've blown up an account, there's all this emotional inertia you've got to overcome, all these bits and pieces that you have to try and push aside so that you do get going again. And I see this all the time still. I see myself reflected in young traders who will get a series of wins and then go on an uncontrolled tilt, as opposed to a series of wins having a controlled aggression and controlled engagement. And it's quite disconcerting to see yourself in other people and to see them make the same mistakes you made. Hopefully, I get a chance to pull them up before they blow themselves up.
Hmm. That really find me interested in really discovering, you know, I do have a question to ask you, but that question might lead our conversation onto another words. You said that you see how the testosterone attribution over the markets really reflects or even reflects more when you're young. And you said that you can blitzkrieg the markets. By the way, I really like that term. So I would like to ask you, as a trader, as a trading coach, and as a trader by yourself for over 4 decades, trading options, which is, high leverage derivative or high leverage underlying asset. I would like to ask you, teaching trading and teaching how to trade leveraged assets, it's a mission by itself. But
It is not easy.
teaching how to trade derivatives to young traders, and I think that a wide variety of your audience
Mm.
um, was between the ages of, like, let's say 20 to 30 in their 20s. Um, how would you educate them, or how would you coach them to maintain their testosterone and to know how to approach the market in the right way and to not blitzkrieg those opportunities? Because once you're hunting for an opportunity, you find yourself out.
You do. It's somewhat of a paradox in that the aggression has to be controlled, because the flip side of the problem I see with other people and other traders is that they'll have what you could call A1 or A plus setups, and they don't get after them. They have an ordinary approach. They might risk 1R on all things. They bet equally on everything. But in terms of getting young traders to just step back, there's one thing that needs to enter the conversation, and that is that money is a great mechanism for clarifying the mind. If you get a young trader
What do you
who
mean?
has, it just clarifies if you're losing money and you can step back and start to reassess and look at the reasons as to why, look at your interaction with the market, what you are doing, then you can start to assign a cost to all the mistakes you make. And one of the things I find is that if people can assign a dollar value to what they're doing wrong, then all of a sudden their thinking clarifies. They start to get a notion that I went too hard here, I went too hard there, that cost me here. And here's the exact amount of money it cost me. All of a sudden, you have a very, very hard bottom line. All of a sudden, you know how much your behavior is costing you, how much your ill discipline and freewheeling is costing. And there is this saying that discipline brings freedom. And if you have the discipline to control yourself, then you have the freedom to act within your discipline sort of framework, which means that there are times to go hard, but there are times to withdraw.
No, I'm with you.
There are.
With you.
And it's just that experience is a teacher, but unfortunately, experience is knowledge that arrives 10 minutes after you actually needed it.
Mhm.
And it's very difficult at times, as they say, to put an old head on young shoulders. Only experience does that. People have to go through the experience of doing things. Imagine this. It's like trying to teach someone to swim on dry land. You can go through all the exercises you want, watch all the instructional videos, have all the coaching you want on the dry land. But once you get into the water, it's very different. And you have to learn from being in the water. Only the game can teach you the game. And that's part of the problem of trading. You actually have to do it. It's a participation sport. So people can read about it, they can watch videos, they can go on chat forums, but sooner or later they actually have to go into the market and experience what the market is like. But more importantly, they have to experience what they're like in the market, what happens to them. And unfortunately, and this is again one of my blanket statements, some people are not cut out to trade. They're just not. For
Mhm.
whatever reason, their psychology is just mismatched with what the market does. They are much better off getting a blindingly simple system that, let's say, buys an index ETF and does that. because their psychology is not suited to it. It's a little bit like friends of mine going through university. Some who were going through medicine went into surgery because they were suited to it. Some went into family medicine, general practice, suited to that. Some went into high intensity emergency retrieval medicine because they're suited to that. It is a matter of finding what you are suited to. And the only way you find that out is by playing the game, which is a little bit harsh.
Wow. You know what, Chris? I would have to ask you this. Since the beginning of our conversation, I doubt I doubt myself over and over and over again about, you know, the one sentence that you said, and I mentioned that. Um, like trading systems, like trend following systems, will ever work and will ever remain profitable. And as long as you adapt the right risk management mechanism, it might be even greater. It might be even much more profitable. Now, after 40 years looking at the markets, I would like to ask you this. You know, looking at market cycles, looking at how good and how great the market evolves over time. On both sides, even bearish and bullish, and bearish both occasions. We do have a trend following system that might work, or other theories that could be implemented onto greater trading systems. But what I'm trying to ask you here is, after participating with over 10 market cycles now. For those of you who doesn't know, that every market cycles happens every 4 years. We have a market cycle, and I would like to ask you, how would you see the markets evolving over time, and how would you adapt trading systems over time? Because trends will always remain, and you can reassess how everything will work, but you might have a level of awareness of how you can, or how you need to design and orchestrate the trading systems properly in order for them to
Yeah.
remain profitable.
There's one thing I want to sort of pick up on what you said, and it is this notion of doubt. All traders who are self-aware doubt themselves.
They
You
doubt
have to,
themselves.
you have to, because you start every day effectively with a blank slate, and the business starts again. And that really doesn't matter whether you're a long-term position trader or an intraday trader. So doubt is part of the game. You have to doubt yourself, because you have to have this thing, which I call variant perception. It is this self-awareness to say to yourself, and to be adult enough to say to yourself, what happens if I'm wrong and everybody else is right? And the only way that works is by removing your ego and actually having doubt. And you say to yourself, what happens if I'm wrong? If I'm incorrect, what happens then? What happens if everybody else's opinion is correct and that's reflected in the market and I'm wrong? So you need that sense of self-doubt. It's an odd paradox. You have to be confident enough to trade, to go, right, here's a signal, I'm going to put money on it. But at the same time, you have to be sufficiently aware that you could be wrong. That self-awareness is a form of doubt. And you actually need that as a survival mechanism. The moment you get cocky about what you're doing, is you're probably 2 steps away from blowing up the account. So you actually have to have doubt as a protective mechanism to stop you from doing that. I think it's an important skill to have. Over the decades, I've met dozens of traders in all walks of life who have not had doubt, and they've gone and blown the fund up. Some very large professional funds, simply out of arrogance, without understanding that there are other participants in the market and their opinion might be right, which means yours might be wrong. But to come back to the point of market cycles, My view of markets is that they have three states. They can be bullish, they can be bearish, they can be static and stagnant. So what
Moving
do?
sideways.
They just go sideways, they just consolidate. And you do get times when asset classes seem to align and they just go sideways. And there's no money in the corner to pick up. But what does that mean in terms of generating rules? I believe trading in terms of the rules is the simplest profession in the world because it can be summed up in three sentences. And those three sentences are global in their application. If it's trending up over the time frame you are trading, you buy it. If it's trending down over the time frame you are trading, you sell it. You don't bet the farm. And they're the only three rules you need. And in terms of practicalities, and this is something that
Yeah,
does my
but for
head.
human, Chris, sorry for the interruption, but for human, those, being educated to themselves, it's mission by itself. Like, speaking about myself as a trader, it's incredibly hard
It
to
is.
maintain and to remain determined to your game plan. This is extremely hard, even though I'm listening to my plan. Over time, if let's think about it, Greg. I do have, you know, situations where I go down or where I go up within my behavior. Like we I getting off the standard deviation of over my trading behavior and it's a mission. So I would like to ask you, how would you suggest traders like me or other traders, how do you suggest to your students to maintain and to remain calm, even if the markets are not that understandable, or
Yeah.
in situations that you need to adapt yourself because markets are dynamic and you need to adapt yourself each and every single day. So how would you remain calm? How would you remain thoughtful? How would you remain clever? That's of course a matter of experience, but there are ways to get trained properly in order to get to those stages.
Yeah. Look, equilibrium is a very difficult thing to maintain in traders, but there's a few things that I do. Uh, Being an Australian, naturally, of my generation, we were brought up in the water. So ocean swimming, body surfing, second nature to my generation. It's changed now. But if ever you're out of kilter with the market and you don't understand what rhythm is, go find yourself a beach, stand in it waist deep, and just feel the rhythm and just
Mhm.
understand that there is a rhythm to all things. Markets have a rhythm. If you watch surfers, what do they spend most of their time doing? They wait. So they incorporate a pause that is forced upon them. They can't force the waves. They can't make the wave appear. We can't make trends appear. It's just impossible for us. But when the wave does appear, they do something very interesting. They surrender, and they surrender to the wave because the wave is the thing that carries them along. The unfortunate thing I've noticed with traders is that because it appears to be a very macho thing to do to trade, I'm buying this, I'm selling this, I'm doing that, all the numbers are changing. There is this inability to surrender and accept that you are just a passenger. And the only decision you have is binary. I get on, I get off. Nothing else matters. The cause of the wave that I'm on is irrelevant to me. I doubt that I could find, and this is me being a bit geeky, that I could find a surfer anywhere in the world who could write out and explain the Navier-Stokes equation to me for wave formation. They don't have to because they know how to do it intuitively. They have that sense of understanding of the rhythm. Traders, I find, struggle with rhythm. They struggle to reduce things to simple things. I have a simple test for traders to identify a trend. You see at the back of my room, I've got a big
Mhm.
red couch. If I'm uncertain of what I am seeing, put the chart up on this oversized monitor I have. I go back there and I sit down,
On the
shut my
couch.
eyes, look at it, and I will instantly know whether it's trending up or down, instantly. If I require any further convincing, I say to myself, if I've got a candlestick chart on that's coloured, what's the predominant colour, red or green? Are there higher highs or lower lows? I've now just answered almost all the trading questions you need to ask. Now all I'm looking for is a point of entry. And it is this notion of understanding and surrendering to what the background trend is, and then picking your time, picking your spot on the wave. The difficulty I think people have, and this is something where I do feel a little bit sorry for new traders, particularly now. There is so much information and you can trade any instrument in the world from your phone that
Mhm.
there's so much noise, and they struggle to eliminate the noise and pick out the signal, which is why I opt for simple rules. More red than green, more green than red. Higher highs, higher lows. Okay, I've solved the hardest part of the equation. I now just need something to tell me to be a buyer or a seller. Has it broken a significant high? Has it broken to a new significant low? If it's done that, then my course of action is obvious. I'm a buyer or a seller, set my money management, and I leave it alone. I let it do its thing. I'll give you an example. I had a student I mentored very, very long time ago. He bought a stock here in Australia, which was a mining stock. We're a resource heavy economy. We go through various boom bust cycles, which is very good for traders. His initial entry was 5 cents, sold them at 7.5. He'd made 50%, thought he'd done exceptionally well. Over the next 8 months, they went to $11, almost unbroken. He'd bought several hundred thousand. It was the sort of trade you could retire on. But because he couldn't leave it alone and surrender to the wave, he felt he had to do something. And the unfortunate thing about trading is that we come from other professions. Very few people are traders from the get-go. They've done something else beforehand. When you have a job beforehand, you're rewarded on what you do. If you're working at $10 an hour and you work 10 hours, you get $100. If you work 20, you get 200. The more you work, the more you get. Trading's not like that. The more you relax into the process and the more you surrender to the process, the more you make. But it is that surrendering to the process and not trying to force it. You can't push the market. You have to wait for it to say to you, Afik, there's money in the corner. Would you like to go over and pick it up? And that's the question the market asks us all the time. When you get situations like we had, let's say with cocoa, when it had that massive run from 3,000 up, every time it opened, it would say to traders, do you wish to participate, yes or no? And it would ask that question over and over and over again. And traders
What did
over
they
and
answer?
over again would say no until the top. And then they say yes. Markets are, my view of markets is they're not confrontational, they're not macho, they're not anything. What they are is an opportunity generating machine. But what they do is they say to you every day, do you wish to be wealthier, yes or no? And your job is to
100%.
say yes and to find out ways of actually doing that, to take advantage of the opportunities that they present. Markets never stop presenting opportunities to us, and they do it over every time frame you could conceive of. There are people who trade FX on tick charts. There are people who take positions on stocks like Nvidia and just ride them all the way out, pyramiding all the time. And they might hold that position for a year, 2 years. It's a matter of finding out where you sit and surrendering to your process, how you do things, how you see the world. But it is that notion of take yourself out of the equation. remove yourself and just surrender.
Let's talk about the markets right now.
Yes,
I
let's do.
think this is, before we'll switch, I have to say those are the gold insights because, no one have ever put it in a way that will be it like as an example that will be equal to, waves, and how would you look at a wave and, surrender to the markets might not be, a negative term anymore. So I think it's really fascinating to look at the markets that way and to be able to surrender to the market, in a higher frequency than you do it tonight. I think it's really it's a really interesting approach that I need to absorb, and I need to enhance it within my training. So first of all, thank you for those insights. Right now, I would like to move on to the markets. Let's talk about options. You're trading options, right?
I had one of the problems we had here in Australia is that we have a very small market, and we used to have a very vibrant derivatives market. But then retail foreign exchange appeared a few decades ago, which enables retail investors to access foreign exchange, which is very good for people with a speculative mindset like me. But simply given the level of leverage that they first offered when they first appeared, we've had attempts in Australia to rein back the amount of leverage that's offered. So you can no longer have newbies opening accounts with 5,000 to 1 leverage. But we also had contracts for difference appear, CFDs. They unfortunately cut the legs out of our local options market. So most of our traders now trade US options, which unfortunately, when you're at the other end of the world like Australia is, and our time zones are out of kilter, means some very late nights and some very early mornings.
Mhm. Let me ask you this. Option trading. How would you trade?
One of the problems with options is people who are quantitative will pick up an options book. The classic is Sheldon Nattenberg's Options Volatility and Pricing. Very quantitative book. Every quant I've ever known has read it cover to cover. It's an extremely dense book. Again, it is a matter of bringing things back to simplicity. Okay, let's say we've got an instrument. Let's pick something. Let's pick something topical like Nvidia.
Mhm.
Been on a massive tear, had its split. If you wanted to trade Nvidia long, what are my alternatives as an options trader? Well, the issue with options is that because you have 4 standard building blocks, long call, short call, long put, short put, people think that you can assemble those in a mechanism that guarantees you a return with no risk. Well, it doesn't work that way. In terms of payoff, in terms of bang for buck, the option strategies that make people the most money over time, and again, I'll make a blunt statement, all the time with no qualification, are long options, long calls, long puts. We have this notion that, and it's something that's gone around the world, this notion of, well, all you have to do is write options because almost all of them expire worthless. No, that's not true. That's a misunderstanding of what happens to options. And we have this saying that options writers eat like birds but shit like elephants because they take tiny, 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 tiny gains and eventually they'll take a catastrophic loss. I won't say the easiest way to trade options, but the easiest way to trade options is to be a long options trader in a time of relatively low volatility, and you buy yourself time. The problem traders have is to try and buy the cheapest option they can find. And the cheapest option they can find is the one with only 5 or 10 days to expiry. The options expiry curve at that stage looks like that. It's fallen off a cliff. And so the thing I try and get across to people is that you have to buy time and you have to buy cheap volatility, but you have to have, by and large, the direction correct. So we come back to that notion of looking at the chart. More green than red, more buyers than sellers, higher highs. I'm a long call trader. I will buy calls, I'll buy time, because the time builds me a degree of insulation. It builds me a degree of protection, because I'm not fighting theta. I'm not fighting time decay. Time decay kills options precipitously. Once you get within that 30-day mark, they just fall off a cliff. The option is having to work so hard, or the underlying's having to work so hard to move you forward. And in the US, they've introduced this wonderful thing called one-day to expiry options, which is the greatest wealth transference device I've ever seen. And it's not wealth transference from the broker to the client, it's wealth transference from the client to the broker. But they're immensely popular. It's one of the odd things about trading. People are drawn to things that will not make them money.
Hmm. Yeah, well, that's a problem. That's a problem that people were never drawn to things that will make them money. Um, but yeah, we cannot control those problems, in our perspective. So I would ask you this, Chris. Trading options, you need to believe in an asset to go higher or lower for a long period of time when buying an option. I would like to ask you because I understand that option is like a fundamental game. I would like to ask you, how do you approach the markets in a fundamental way that enables you to have a clear vision or have a clear understanding of where the asset will go, and how would you make the right decision uh, to where the asset is going to go in order for making yourself prepared enough um, uh, for buying or selling
Yeah.
an option.
So probably just to clarify, you mean by fundamental having an idea of what the asset is, its prospects and the like?
Hmm.
I have none.
Hmm. Exactly.
None. None at all.
Hmm.
In many respects, for example, when I'm trading stocks, I run a series of computerized scans which have a series of variables built into them. When it throws up the stock code, that's all I know. I don't even know what most of the things I do buy. With options, it is different simply because they're heavyweight names. But I have no understanding at all, nor interest. Because what I try and do, here's my sort of overarching rule for people. There's a few things, there's two fundamental questions that I think traders need to ask when they're developing a system. And that is, when I add information of any sort, doesn't matter what it is, does it make me more money? Or does it do something for me in terms of my ego? Does it make me feel a little bit better that I think I know something? So does it help me make money? From that naturally flows the notion of how can I simplify things? How can I make them as simple as possible so that I maintain the integrity of all the information the price is conveying to me without missing something? And the only thing I look at, the thing I always default to, is price. It's simply price. That's it. Because my view is it's a little bit akin to the efficient market hypothesis in that I believe that the only view that counts is the markets. What you think you know is irrelevant. This to me falls into the basket of things known as the narrative fallacy. I have a story. I'm smart. My story must be right. Therefore, the stock must do what I think. Doesn't have to do anything that you think. It can go its own way, which is why, irrespective of the time frame I am trading, whether it be short term or long term, I'm a trend follower and I default back to those rules I had. And that is, are there higher highs or are there lower lows? More green than red, more red than green. And if I'm looking for some sort of trigger, has there been a trigger on an increase in volume? Yes or no. So every decision is binary. It has a yes or no as I step down through the matrix. And I get to the point where I get a go signal, I just place the order and then leave it. Risk management does the rest. I'm one of these odd people who have absolutely no idea about what they trade. Look, I've got friends who are involved in FX and they crap on constantly about monetary policy and yields and all the rest. And my response is simple. Is it going up or is it going down? I don't need to know anymore. The rest to me is just noise. And I find there's already so much noise in markets that more noise doesn't help me. And I don't think I've ever found a situation where more noise helps anyone. But I found an infinite number of situations where less noise helps. And that cuts across all professions. In aviation, we have a thing. Aviate, navigate, communicate. Don't worry about anything else. The rest is noise. Keep the airplane in the air, keep it pointed in the right direction, talk to somebody. That's it. Trading's the same. Point yourself in the right direction, remove everything else, let the market do its thing. Just leave the market alone and just go with it.
Mhm. I understand. All right, Chris, one last question before we go. Um, I would like to ask you this. Speaking about trading derivatives, how would you prepare your your risk management system, and how would you adapt it onto trades that went onto that went under they undergo your plan, and you really need to take care, or you really need to adapt your risk management system in order to not lose money anymore.
Let's talk about options, because if everything for me is based on a very hard deck, a hard floor, there is a point that I have calculated whereby if price goes to, I've lost the amount of money I want to lose and I'm leaving. Now, that can be for many a hard dollar amount. It can be $500, $1,000, $1,500, $2,000, doesn't matter. It's idiosyncratic for each trader. Hard dollar amounts work very well. Hard dollar amounts combined with some sort of position sizing using volatility work very well, simply because they incorporate the underlying volatility of the instrument. So you're not popped out by noise. And in many derivatives markets, you can get a lot of noise. You can get a lot of noise in options markets. The more liquid the market, the less noise there is. Some markets are quite illiquid, quite noisy. Everything comes back down to asking yourself a simple question. At what point am I in pain? And can I act on that pain point and pull the pin there and then? It is that pulling the pin that keeps you in the game to play it again. The problem we have is people don't pull the pin. And so the account gradually erodes and eventually collapses. And it doesn't have enough left in it to recover any of the gains. But more importantly, the trader's now burdened with all sorts of emotional inertia, pain, regret, all those things that we all beat the living daylights out of ourselves with because we are human. If you have a pain point, it's not a matter of being, what's an easy way to say it? Many people take incurring a loss as a reflection of their self-worth. That's not true. In taking a loss, you're being a good custodian of your business. And this drags me to the point that, unfortunately, people don't take trading as a business. It's regarded as a hobby. You sort of do it, as opposed to having it structured mentally as a business, whereby you have to in all instances, stop the rot. And the moment you can do that, you stay in the game. Markets are a little bit harsh in that the longer you survive, the more money you make. The more money you make, the longer you survive. The longer you survive, the more money you make. It's getting over that first hurdle of surviving initially. Because once you survive initially, a few things happen. Confidence goes up, confidence in your decision-making goes up. And the confidence in your decision-making goes up in a rational way. Strangely enough, your perception of markets goes up. Your ability to take in information without being stressed goes up. So the fidelity of your decisions goes up. And it becomes, again, this feedback cycle. And you accept that in all aspects of the world, in all aspects of trading, there will be times when you have losing trades. It's part of the game. If you learn to, again, we surrender to this notion. You surrender to the notion that all systems have drawdown, all systems incur losses. It's just part of our game. And it is changing it from this notion of this do or die business to this is just part of our game.
Chris, I would have to tell you something. You are incredible. Like this is I think one of the greatest lessons that I have learned over the markets for a long period of time. And I'm running the podcast for almost half a year. And, it takes time until you find the right man who speaks fluently about the market and who speaks in a real narrow way that really enables you to understand how you need to evolve your overview, your point of view over the markets, which I think you have done perfectly.
Thank you.
I would like to thank you for your presence today.
That's very
It
kind of
is
you.
incredibly, incredibly awesome to have you here. This is a pleasure listening to you and learning and absorb as much as I can. I hope that I will be able to embrace more and more lessons that you have mentioned over time. But the number one lesson that I will embrace right away is how would you surrender when a big wave is coming on your favor? Um, and how do you take care of opportunities? This is another thing that I would like to practice. So I would like to thank you again for your presence. It was
No, it's
incredibly
been a
helpful.
pleasure.
It was my pleasure. Honestly, it
Yeah.
was my pleasure, and I am grateful for the opportunity. So, Chris, thank you for participating within our show, the Trade Pod. Hope to see you again. Thank you.
No, thank you for the company and thank you for the invitation.
Thank you. I really appreciate it. Bye bye.